Welcome back to the channel. I'm Foreman, and today I'm going to be talking about my 3 biggest positions in my stock market portfolio and what I'm planning to do with them over the longer term future, also why I'm truly invested. I hope that from this video you can see what kind of things I look for in the companies I hold, also see some of my visions for the future and why I am particularly bullish on each of these 3 companies. And if you like the video, please drop one of these to help beat that YouTube algorithm. To start with my 3rd largest position, this stock is actually Argo Blockchain. This is a stock that has notably been my worst performer in the portfolio so far. However, I believe this is just an impact or problem due to my timing of buying into this investment, and so therefore in the short to medium term I am down 28.62% on this investment, largely fueled by the crash or let's say correction in Bitcoin as of the day of recording this video. However, I bought this stock a little bit too early. I jumped the gun, I got excited, I did have cash to buy the dip, but I averaged down at too high of a price, and I should have had patience, discipline, and most importantly, a plan of what price I should have started buying at rather than just buying relentlessly and without much strategy. Regardless, I'm bullish on this stock over the longer term. I do need to talk about the exposure to crypto. This is why I like, or more particularly exposure to Bitcoin and Zcash. This is why I like Argo Blockchain. I believe that Bitcoin is an asset that is likely going to be adopted further in the future. I'm not the most bullish person on it, and in fact, you may even look back a few months in the videos and I may have concerned or had addressed some concerns about this currency, as I don't feel it can be an effective store of value just yet. However, I also do believe that ignorance is more than likely possible, and I do not wish to be ignorant to a sector that could certainly show a lot of growth. And so I think diversification is protection against ignorance. And at this point, what I've done is I'd bought a position. However, another mistake I had made here is that I'd bought way too much. This takes up a large proportion of my portfolio. And in fact, at the current amount, we're talking about nearly 20% of the portfolio is taken up and exposed to Bitcoin, and this is already down about 30% too. I am bullish on this, and my reasons for being bullish on this are they have strong competitive advantages, such as having higher mining margins than other listed mining companies that I know of. They have flexibility. The flexibility is that if, for instance, Bitcoin becomes less profitable, they're likely going to mine another crypto, hence why they also mine Zcash. This is also something that is particularly interesting because it means they can adapt their business model depending on what is most important to the business and maintaining profits. I do also like their plans for building their Texas facility. I think this is a good place to really harness the power of renewable energy whilst also building up a large Bitcoin mining infrastructure. And I'm very glad that they are not anywhere located in China, as China has certainly been cracking down on that lately. I also believe that they are significantly undervalued compared with their assets on the balance sheet, and also just because of how good of a business they are and how much they really are profitable. In the last month, their mining margins were 86%. I do think the management overall is quite good, although lately they did leave a sour taste in my mouth. This is because they had taken up an aggressive short-term Bitcoin-backed loan that I believe had a 6-month expiry date, although this may not have been specified. This meant that it was effectively a gamble on the price of Bitcoin, and this would mean that basically if Bitcoin were to rise, then yes, the gamble is paid off and they'd have to sell less of their HODL, or the total Bitcoin they hold on the balance sheet. But if Bitcoin had crashed and gone down significantly, then this wouldn't be a good thing because then they'd have to sell more of their HODL and it affects their long-term performance. So far, this has paid off and they've sold 61 Bitcoin off the balance sheet, generating roughly £2.14 million. And this is okay for now. I'm satisfied with what they've done, and it is to fuel the progress of their building in the Texas facility and likely continue the ongoing maintenance of the company. I believe this is a company with good exposure to the likes of Bitcoin, which I wanted that diversification into. And I think that because they are more undervalued than their peers in the industry that are also listed, I think there is potential when they do eventually list on the NASDAQ, which they have applied for, or at least very largely alluded to the fact that they are going to uplist onto the NASDAQ from the OTCQX markets. I believe that this stock has potential to generate a nice return. In the past, I was saying, well, they could generate a 3 to 4 times return. I think that's quite unrealistic because there are some significant differences between, for instance, Argo Blockchain and Riot Blockchain, or even Marathon Pattern Group. For instance, Marathon has a much larger HODL, and they have a lower debt to equity ratio as well. Regardless, this is a stock I will continue to hold. Yes, I'm definitely overexposed to this stock at the moment, and that was a personal mistake I made, and I was very eager to buy the shares in the past, and I've spoken about this, which I'll leave a card at the top right of the video about my greatest mistake. But overall, Argo Blockchain is an investment I'm satisfied and happy to continue holding, albeit if I don't buy any more shares. I may look to trim this position in the future once this NASDAQ listing happens, just to lower my exposure somewhat, take some profits, and perhaps redeploy that capital elsewhere where I see value. And if you'd like to sign up to my stockbroker Freetrade, you can get a free share worth up to £200 when you use my link in the description down below. Now, the second largest position in the portfolio with 69 shares, and I did not do that on purpose, this is Games Workshop. This takes up a staggering near 30% of my portfolio and is probably my highest conviction stock with an equity of £8,445. Currently, I'm up 33.82% overall on this investment, or the equivalent of, I'm just checking now, £2,134. Games Workshop is one I really like because not only does this appeal to what I'm a fan of anyway, they have a very strong business model and durable moat. They collect and collect, I don't think that's the right term to use, but they collect and continue to build their intellectual property or IP through their consistent creation of new stories, new realms through their Black Library. This Black Library is heavily integrated with their core business model, which is their tabletop game where they retail miniature figures. And in this tabletop game, these figures are no cheap price. They also managed to make this vertically integrated. This means that from every part of the supply chain they deal with, this can mean that they can maintain very high profit margins, which I believe are roughly in the 30% region. And this means they're able to get heavy amounts of cash flow, which admittedly they aren't quite reinvesting back into the business and rather deploying it as dividends to shareholders to add value, which is a little disappointing because I think they could do more. But honestly, I can't complain because I'm getting shareholder returns in dividends, but they're also managing to continue growing at a very strong rate despite pushing away this capital. They were one of the companies that had learned from the pandemic. Well, they had benefited from it too, but they had learned that actually we should, or as a business, we should have an emergency level of capital so that we do not need to go into debt or borrow any money when times are tough. And they were one of the first firms that I'm aware of in the UK to pay back the furlough scheme. And they've also dished out a lot of money in bonuses to their staff, which I think is a great thing because the average employee can generate 10 times as much value as the amount they are paid. And so I think this is a great way to not only boost employee morale, perhaps their confidence and loyalty to the business. This means that this overall could be better run as a business. And this is the high quality aspect that will correlate in most of these investments, is that they have a very high quality management. They were able to turn around the business and do significantly well. Now they have a staggeringly strong moat in which there are no real competitors to this. And in fact, the only real competitor to this, in my opinion, could be the rise of 3D printing. And that's just for their miniature figurines. Yes, 3D printing is likely a threat. And I know there are some people that are on Patreon, for instance, that would then print off very similar models to the ones that Games Workshop would license and sell for a much higher price. And they're making quite a lot of money from this. But I don't think it's going to be the end of it. And ultimately, there's rules in place that mean you have to have a certain percentage of your models as Games Workshop licensed ones. And also, when we come to the point of it, I think customers or players that are really engaged in this hobby would like to buy the real thing, as it feels different to buy a fake. You would know that feeling where it's not quite the same. Whilst yes, it looks similar, it's still not the same. I think 3D printing will rise. I don't think it will really impact the business model, but I do think their business model is transitioning. We may see something like I've seen with Future PLC, where they were a magazine retailing business. They had their own hobbyist magazines. These magazines have started to die down as of late, mainly because of the upsurgence of the likes of the internet and online technology. However, what they're doing right now is making as much cash flow from their magazine sales and moving this into their other business, where they're trying to collage a large number of websites, harvest a lot of data, and then use that to provide value to their consumer base. This is what I can see happening with Games Workshop. They've got their retail miniature figures. If this starts to decline, which at the moment it really isn't, total sales in Northern America had grown by 39% as part of the investor relation presentation, and then they'll likely transition this into entertainment. By entertainment, I mean movies, I mean TV series. We're already seeing the start of this with animated series in their Warhammer Plus subscription. I'm very much interested in this subscription. I think there's a lot of potential for future growth with it. And we also have the likes of their royalties. They're selling out their licensing, their intellectual property to the likes of, for instance, video game developers, like ones at Sega, the ones creating Total War Warhammer. I've forgotten the other brand. It's a very well-known brand, but I've forgotten their name. Regardless, the idea is that they sell these royalties and pretty much 100% of that revenue reaches the bottom line and is the same as earnings. So it basically means that they're going to have very high profit margins if they continue to push forward and sell more royalties, which overall will continue to happen as they create more stories with their Black Library, create more universes, also create more miniature figurines and products, and also then now push out TV series, animated series, even potentially films. All it's going to do is expand and expand until there is this massive immersive universe, which there already is, to be fair, that would generate a significant amount of value. And I'm invested in this stock for that reason. Admittedly, I've not bought that recently. Shares are pushing up to all-time highs. I'm holding back because I think there's better value elsewhere in my portfolio in the short term. But don't get me wrong, this is my highest conviction stock. I'm just trying to be patient in the markets and take a lesson so that I can try and buy elsewhere. A lot of these strategies and my mindset of creating a plan I've learned from reading. And if you're interested in any of my books, I've got 2 links in the descriptions down below. I've got The Art of Execution by Lee Freeman Shaw. This is how the world's greatest investors made millions and still were wrong most of the time. And The Intelligent Investor, that I'm sure many of you will know, written by Benjamin Graham, the definitive book on value investing. Links in the description down below. I am sorry, it's just another way of generating income for the channel. And then my biggest position in the entire portfolio is the likes of Boohoo. I hold 3,358 shares. This represents nearly 40% of my portfolio and is a very high amount. At the moment, share price is quite low. It's currently trading at around about £2.73 per share. And this was trading well into the 300s, meaning that my position with this stock could likely be a lot higher if the shares are able to recover. They have had some issues with their ESG. These particular funds that focus on ethical, social, and governance had sold out, meaning that there was a lot of flack by the media, well, this is what caused it, about their governance and their monitoring the supply chain. They were accused of paying staff less than minimum wage in these supplying factories. And this is how that they were able to bolster their profit margins, which led to a lot of FUD, fear, uncertainty, and doubt, pushing the shares down. There has also been many more things that have fueled the shares, like more concerns with the supply chain, the US lawsuit that threatens to fine up to $100 million for their sales promotions and how they may be fake promotions and never intended to sell at that retail price anyway. And there is some certain concerns when we had the shorting by Shadowfall, expressing concerns with once more the governance of the business and the management themselves. I bought on this particular dip. I bought because I felt that during this time, this can reform a company. They're going through a lot of trouble when there's blood in the streets. I think that this is a great opportunity, and that's why I bought. because not only are they going to be at a good value, but they're going to learn how to adapt. They're going to have to invest capital, and they have invested a lot of money into their agenda for change, even appointing Sir Brian Leveson. And I think all these changes are going to put them further ahead than anyone else in the industry, and that presents another competitive advantage that they can maintain. They once more have higher profit margins, are able to make more money for what they sell than any competitor that I'm currently aware of, and they also have incredible revenue growth. I'm talking 30 to 40% revenue growth each year for the last 5 years, and some years were even more than that. We also have their guidance, which is slightly lower for the next financial year, of only 25%, but this is still impressive growth for a company of their size. And I think this shares the shared economies of scale model. The idea is that over time, this will continue to get bigger and bigger. There is no real limit to their upside, and they can diversify, like their recent acquisitions and use of cash flow. By the way, all of these businesses have very strong balance sheets with high amounts of cash, but they were able to use the cash on their balance sheet to acquire brands from the recently fallen Arcadia. We're talking Dorothy Perkins, Burton. We're talking Tim Wallace. It was Wallace, wasn't it? I lost myself there. And we've also got Debenhams. The main part I'm interested in here is that Debenhams, they had a very strong beauty sector or industry. Boohoo could easily transition from just clothing retailing to also beauty. If they make this work with Debenhams, which has also expanded their customer range to likely an older amount, we've also got the likes of that beauty sector. And if it works well with Debenhams, they could transfer this to their other brands like Pretty Little Thing and Boohoo. This could show a lot of potential, and their brands are already dominating a lot of the market, and their US growth is phenomenal. It isn't their largest market yet, but there is a lot of potential for growth, and it only takes to look at their most recent financial performance to see how impressive that truly is. I believe the UK revenue growth, I'm only guessing now, was around about 40%. I'm pretty sure the US was near enough 50%. And so this is a stock I'm very much bullish on, and I have an equity of £9,167. My average share price for this investment is £2.56, and I have been consistently averaging up in this investment because at the moment, at the current price, I think it is significantly undervalued, and I think there is a lot of potential for growth in the future. And to be honest, if the shares remain stagnant for the next few years, the price to sales ratio is going to drop, and it's going to become more of an attractive investment. And I think eventually, once we've gotten past all of these issues, the governance is greatly improved via their agenda for change, then I think there is a lot, and I'm talking a lot, of potential for a very good stock that can hold a very premium valuation. And so that is why it is my highest or largest stock in my entire portfolio. And if you're interested in free UK stocks to buy right now, then click the card at the top right of the video. Thank you for watching. I'm Osborne Foreman. Have a fantastic day.